Financial basics. Ready to take control of your money? In this video we are going to talk about budgeting and saving. Budget. Does anyone like that word? How about this instead, the 50-15-5 rule? It is a simple guideline for saving and spending. Aim to allocate no more than 50% of take-home pay to essential expenses. Save 15% of pre-tax income for retirement savings. And keep 5% of take-home pay for short-term savings. Every situation is different, but you can use this as a starting point. Essential expenses, 50%. Some expenses simply are not optional. You need to eat and you need a place to live. Consider allocating no more than 50% of take-home pay to must-have expenses, such as housing, mortgage, rent, property tax, utilities such as electricity, gas, water, homeowners or renters insurance, and condo or home association fees. Food, groceries only, do not include takeout or restaurant meals, unless you really consider them essential, for example you never cook and always eat out. Health care, health insurance premiums, unless they are made via payroll deduction, and out-of-pocket expenses, example prescriptions, copayments. Transportation, car loan or lease, gas, car insurance, parking, tolls, maintenance, and commuter fares. Child care, day care, tuition, and fees. Debt payments and other obligations, credit card payments, student loan payments, child support, alimony, and life insurance. Keep it below 50%. Just because some expenses are essential doesn't mean they're not flexible. Small changes can add up, such as turning the heat down a few degrees in the winter, and turning your AC up a few degrees in the summer, buying and stocking up on groceries when they are on sale, and bringing lunch to work. Also consider driving a more affordable car, carpooling, or taking public transportation. Retirement savings, 15%. It's important to save for your future no matter how young or old you are. Why? Pension plans are rare. Social Security probably won't provide all the money a person needs to live the life they want in retirement. In fact, we estimate that about 45% of retirement income will need to come from savings. That's why we suggest people consider saving 15% of pre-tax household income for retirement. How to get to 15%? If contributing that amount right now is not possible, check to see if your employer has a program that automatically increases contributions annually until a goal is met. Another strategy is to start by contributing at least enough to meet an employer match. Short-term savings, 5%. Everyone can benefit from having an emergency fund. An emergency, like an illness or job loss, is bad enough, but not being prepared financially can only make things worse. A good practice is to have enough put aside in savings to cover 3 to 6 months of essential expenses. You can start with $1,000 or a month's worth of expenses, and then gradually build up to 3 to 6 months' worth. Think of emergency fund contributions as a regular bill every month until there is enough built up. While emergency funds are meant for more significant events, like job loss, this can also help to cover smaller unplanned expenses. Who hasn't been invited to a wedding? Cracked the screen on a smartphone? Gotten a flat tire? Other examples: maintenance and repairs of cars, field trips for kids, co-pays for doctor's visits, Christmas gifts, and Halloween costumes, to name a few. Setting aside 5% of monthly take-home pay can help with these one-off expenses. It's good practice to have some money set aside for random expenses so you won't be tempted to tap into your emergency fund or pay for one of these things by adding to an existing credit card balance. Over time, these balances can be hard to pay off. However, if you pay the entire credit card balance every month and get points or cash back for purchases, using a credit card for one-off expenses may make sense. How to get to 5%? Having this money automatically taken out of a paycheck and deposited in a separate account just for short-term savings can help a person reach this goal.
Thank you for watching. If you enjoyed this video, press subscribe so you won't miss my next video.